Yes, boys. Nah, I still ain't even thought of an intro yet. Eesh, that was kind of cringe, yo. Yo. Nah, never doing that one again. Anyways, made a good trade today on EUR USD. Gonna do a quick trade breakdown on it. Get you guys' insight on it. Leave it down in the comments. The reason I'm doing this is just for more, exposure on the algorithm. Hopefully you gain something from this. Hopefully you gain a bit of understanding on how I actually trade when it comes to Forex. Yes, this was a Forex trade. It wasn't actually a crypto trade, which is what I previously did. I'm probably gonna do another video soon actually on crypto because crypto has been moving and it is time to do an updated video on my thoughts on the crypto markets. But as of right now, I'm gonna do a Forex video. This may not make sense for let me just increase my camera. This may not make sense for beginner traders. This is definitely another video for advanced traders. So don't feel left out if it doesn't make sense to you. Rather inquire to learn. Rather seek understanding and don't give up because every single trader who understands what they were doing at some point in their life was a noob. They had no knowledge on it. Knowledge does not magically appear. Rather, knowledge is acquired through difficulty and endurance and consistency. So, rather try and learn. But let's get straight into it. Gonna do a breakdown on this EUR USD trade that I made. And yeah, get into it. Now. Let's begin. As you can see, price overall on the long-term time frame, or currently on the monthly time frame, is very much bearish. There's no reason for me to be looking for well, there is a possibility of me looking for a long, but my overall bias right now is bearish. Why? Because on the monthly we have taken this very, very big monthly low, which is a very, very big thing. Now if we go on the weekly now, it's just the same thing, bearishness. We're in a downtrend, price is pushing lower and lower and lower. Same thing with daily time frame. It's even more clear on the daily. And then same thing on the 7-hourly. And then we go towards the 4-hourly now, which is why I started to look at this trade. Now, today was actually a day of CPI, meaning that, the US announced their inflation rates. So I was looking not to trade before, but rather after CPI. Now, if we're to go on the hourly now, you're gonna see a massive, massive candle appear. I can't remember where. Look, it's this one here. So this massive candle appeared, and prior to that candle appearing, I had marked out a 4-hourly order block area here, looking to see how price reacts to this 4-hourly order block area here. Why? Because this area pushed price all the way down to break these lows here. Now, this area got hit after the CPI was announced. I don't know why it has now replayed the whole thing. But this area, let's go back. This area got hit when CPI got announced, and then I had looked to see how price reacts within this area here. Now, I was kind of nervous because, it was CPI and there was a lot going on, but then it seemed like it wasn't that crazy of a CPI announcement. So I did look for trades after. And then I saw the market, actually sort of respecting this area, we're rejecting it. And then I thought, okay, we could be onto something here. Now, I actually missed an even better entry, but nevertheless, we still made money on this trade. Now, where did I miss this entry? Now, if we're to go on to, I think it was the 1 minute actually. If we're to go into the 1 minute, we can see this area here of imbalance. I think is that also on the 2 minute? Yeah, it's also on the 2 minute. I was looking mainly at this area of imbalance here. Really and truly, I should have drawn it out like that. I was looking mainly at this area of imbalance here. Once we had seen some rejection in this of this order block. Oh, on top of that, I forgot to mention as well that we did sweep this area of liquidity here. You know, all these people who were entering shorts here got wiped out. And the process of reaching this order block, in the process of CPI being announced, we took out all of those liquidities, meaning that there is a lot of money in the markets right now that banks have access to manipulate the markets. And then, if we're to go back to what I was talking about, this 2-minute imbalance here, once price had pushed down and printed this 2-minute imbalance, I wanted to see how price would react when it came back into this area. Well, I'm saying this in perspective of I did miss this trade and I did look back at it, and this is what I would think if I was actually on the charts at the time. But I would have seen how price would have reacted to this area. And firstly, we have this area of liquidity here. What does that mean? It means, you know, there's probably, even though it is on the minute time frame, this high needs to get taken to create what I would like to call a protected high. What is a protected high? A protected high is just a high which forms after liquidity is swept, meaning that it's protected because it doesn't need to get taken again. Sometimes it does, but majority of the time, a protected high doesn't need to get taken. I could have, you know, started looking for entries here, but because there was no protected highs, you know, I didn't want to look. I wouldn't look for entries here. But once this liquidity had been swept now, and we had formed a protected high, this was where I was now. This was where I would now be interested in the markets. And then boom, what do we have here? A fair value gap, an inverse fair value gap, shall I say, get taken out. And if we are to go on like the 15-second time frame, probably this would have been a change of character. Now, where would I actually have entered this trade? I would have entered the trade the second that we had closed here and put my stop loss right above this protected high. Where would I have targeted? Exactly where I targeted. See, I should have targeted, you know, this low here, but rather I just wanted to be safe and just target here because, like as I said, it was a CPI day. But that's where I would have targeted if I had entered there. Would have got a slightly better entry, got a 4-4, 4-4 risk to reward, and I could have got a second trade here, which is why I actually entered the trade. But instead, I only got one trade and then got, you know, a 3.86 risk to reward. But nevertheless, you don't gain every single opportunities in the market. So let us proceed to where I actually entered the trade now. Now, this is what I liked. I like to see that price had fully, you know, displaced all the lows to confirm bearishness. Now we are fully confirmed bearish because why? We had displaced all of these lows here. And it was beyond the point where it could have been a liquidity sweep. And then I had drawn out this 5-minute fair value gap here. This 5-minute fair value gap was what I was really interested in. Wanted to see how price would react to this area, if it would respect it, and if it does, I would look for an inverse fair value gap and a protected high and a liquidity sweep in this area. So now what happened was remember this is the 5-minute area. What happened was price kept on pushing lower and then we came back up to the 5-minute area. Now I went on the 1-minute now, and this is actually what I saw. I saw price initially tap into the 5-minute area here. It initially tapped into this 5-minute area, and I was thinking, you know, it's pushed off of it. Should I potentially enter a trade after I see, you know, maybe this inverse fair value gap get taken? But This is why it's very, very important to wait for a protected high, because straight after that, look what happens. This high gets taken. Now, I'm saying that because if I did enter that trade, I probably would have set my stop loss above this high. But why would I do that when it's not a protected high? You know, that increases the likelihood of one, me failing the trade, and two, just me losing money. So always try and find a valid protected high. But nevertheless, we didn't enter the trade at that position. And then price, once that protected high was taken, started to respect this 5 minute fair value gap. Not protected high, sorry. Once this high was taken and we started to form a protected high after sweeping this liquidity, then we started to respect this 5 minute fair value gap. And this is where I actually entered the trade now. I entered the trade once this inverse fair value gap got taken. Where is this? Let me just make it clear for you. I entered the trade once this inverse fair value gap on the minute time frame got taken here. It was around here. Sorry. Once this inverse fair value gap got taken, it confirmed to me that we are bearish. On top of that, we're respecting this 5 minute area, and on top of that, we have this new protected high start to form, and we also have this liquidity sweep form. And I can't go on it on this chart right now, but on the 15-minute time frame, we had a 15-second, sorry, time frame, we had broke these lows here, which shows my change of character, meaning that we are bearish, and you know, price should be going lower. Now, I entered here because all of those stuffs had played out, and you know, the protected high was here, so I didn't want it to go too low. So I put my stop loss at this protected high here, and then I targeted this area, this liquidity area here. Really and truly, I should have actually done the proper full like area of liquidity here, but I didn't want to be too greedy with the trade. But nevertheless, still made money. Can't complain. Oh, I should have even targeted here. I could have even targeted here, and I could have targeted here as well. But you know, sometimes you just have to manage effectively and take what is given. So yeah, that happened. I'm in the trade now, and then literally price just dumps and dumps, and then hits my take profit. Now there probably was more opportunities to actually add to this trade, like for example here. But this is me just looking at it for the first time. I actually haven't um looked at this prior to making this video, but I feel like, okay, look, we can see this 5 minute fair value gap here. Then now I'd want to look for my protected high form, which was formed here after this liquidity was swept. And then I would like to see a inverse fair value gap be taken. So for example here, this inverse fair value gap got taken, and this was my change character. So yeah, I probably could have even just entered here if I really wanted to, but yeah, I actually could have entered here. That would have been a pretty nice setup. And then target, definitely would have targeted this low here if I had entered that trade, but I didn't. Why? I didn't want to be too greedy with the markets. You know, I already had made a fair amount from this trade here. I'm actually kind of surprised that I didn't actually see that now that I'm looking at it, but is what it is. Is what it is. So yeah. So yeah. And then obviously I didn't enter this trade. I got stopped out. I mean, I took profit here, but the markets then continue to go all the way down. If I just and exit bar replay mode, the market's literally dropped all the way to here. But I stopped there. But like I said, made money. Gonna post proof on the screen right now that I was in the trade. I don't want to reveal how much I made from it for you pocket watching us niggas. But gonna post proof on the screen, add it to the screen right now that I was actually in the trade. And yeah, that is just a quick little breakdown on this EUR USD trade that I was in. Hopefully you enjoyed. Like, subscribe, comment, do all of that bullshit shenanigans, trying to get my name on the algorithm. Probably gonna do a Bitcoin or crypto video soon because, like I said, crypto markets are moving. The last time I made a video was like a week or two ago. So do need to update you guys on the crypto markets. But yeah, that's it for now. Peace out.